Before we dive into the video, a quick word from our sponsor, TradeStation. As tape readers, we rely heavily on TradeStation for their time and sales. TradeStation offers ATC students an account representative, zero commission, and a cash reward with qualifying deposits. Now back to the video. Hello and welcome everyone to the 10th ATC Tape Reading Podcast. My name is David Torres and I'm a longtime student. A couple announcements before we get started. As we have weekly night review sessions. These are 8 p.m. Eastern Standard Time. These are free to anyone at the current moment. You can come in, see what trades we took during the day and how we're breaking down the tape. And also quick chat room wise as well. I mean, if you guys are interested and you're new here or you're new viewing this, feel free to DM us, comment on Instagram, comment below. Chat room will also throw in a full free 1 through 4 course that is included with the promotion that we have going on. So feel free to take advantage of that. That's a great deal going on. And with that taken care of, it's my pleasure to introduce Rich Lepis, CEO and head instructor of Ahead of the Charts. Rich, how are we doing today?
What's going on, Dave? Doing great.
I'm loving these series. I mean, I feel like they're just progressively getting better and better and better.
Yeah, honestly, between these and I love the student series because you really get a view into what it's like to learn how to actually do this.
Yeah, the night review sessions are really beneficial. I've seen so much improvement from the students just from the first one to this recent like 10th edition that we did.
Well, how many students today just told us since we came back from onsite and started really focusing on the night shifts? How many students had the best week ever this week?
Yeah, we had many students.
About 9:45, and they're gone for the day.
And it's more than one, or it's the whole group, right? They're all really getting together and saying this is the best week we've had. You know, they're cutting those trades down. Those improvements are clear.
It's not like it was a great week where you just clicked the button and everything worked out. It wasn't. It's funny. We do so in the chat room. We do our morning meetings at 9 a.m. I always try to do a morning meeting, but for the past maybe 3 to 6 months, I haven't had anything great to say. And if I don't know what's going to happen yet, I'm not going to make something up. It's just there's just no reason to actually do it. So these students actually having their best weeks means so much because it's not like it's the best market we've ever seen and you just click the button and it works.
Yeah, no, it's definitely been one of the more difficult markets. I mean, I remember there was a year, or two ago, the morning meetings, we had to cut so many stocks out because there was just so much stuff moving. There's so many prints, so many setups, but now we don't have a thing. So it's definitely, have to be a lot more disciplined. You have to really know your percentages. So it's not as easy, but to see that success as well.
Discipline and having patience. It's really what it comes down to.
Yeah. So that's awesome to see. So really highly encourage you guys, viewers, non-members, whatever, just feel free to reach out. I mean, we have so much free content. It's kind of ridiculous how much free stuff we give out there. But anyway, moving on to topics. First topic of the day is going to be consolidations. Consolidations in terms of, how we perceive it as tape readers, how we look at it, we read it, we understand it as tape readers. So I think the common understanding, I have a definition here of what, I just Googled what does a consolidation mean, and this is kind of the definition, is consolidations are typically trade within a limited price range, offer relatively low trading opportunities, another pattern emerges. Technical analysts, regard these periods as indecision and to be cautious. So I think the whole kind of conclusion there is, technical analysts, they want to see breakouts either way of a consolidation. And I know, yeah, so they want to see, obviously they don't want to be in consolidation, makes sense. And I mean, the simplest form of consolidation is, accumulation distribution. So I kind of want to pick your brain on how do we view consolidations as tape readers? I know there's been a ton of questions in the past couple of years about consolidations. I know people have struggled with them, maybe overanalyzing, because it's a blessing and a curse being a tape reader because we can see all the substance within a consolidation, and I know it can also confuse traders as well. So I kind of want to pick your brain on, consolidation as tape readers, maybe some of the most common mistakes you see, or along those lines.
All right, so really when it comes down to it, if you want to break down a consolidation, just let's make it simple. It's the Bulls fighting the Bears. Now that's what, so, I completely disagree with the definition of what they're giving because yes, technically, if you want to break it down into a simplest form, you have bulls fighting bears, buyers fighting sellers. They're going in, but there's different ways to look at it. So when I see a consolidation, I look for certain things. Now, one of the biggest reasons that we see a consolidation, especially in the day trading aspect, is the fact that there's not really much trading going on. So we'll see all the time at 11 o'clock until maybe 1:30, somewhere in that area, stock just goes into consolidation. So we have to be able to identify what a consolidation is actually showing us. Now, if there's no trading and it's in a consolidation, basically all that tells us is that at some point volume's coming. It could be to the upside, could be to the downside. But what we really have to focus on is what was the original game plan before it got into that consolidation? Did they tell us our price target was way higher? Did they tell us that was above our price target? And that's really where we want to start. So many traders are, and it's funny because they're going to think about this for a second. It's okay not to know what a consolidation means. And so many people, we want to be able to analyze and know exactly where it's going to come out of that consolidation. But you got to think about something. You could have a huge amount of buying that comes into a consolidation. Now, that could technically mean two different things if you don't have a game plan before, because that could mean that they're going to build out of that consolidation. So that means that it's going to drop down lower. That could technically mean they built everything that they need and that the stock can go higher. So in that area of, and I agree with the point of indecision, there's a lot of indecision there unless they show you something blatantly obvious. Now, I always look for in a consolidation, the money flow aspect of things. So really just the percentage of what I can see is buying versus what I can see is selling. But even if my buying percentage is way higher, it leaves me in that same position where technically it could break out because I don't know how much Goldman Sachs wants to build or JP Morgan Chase. I don't know the answers to that. So if they show me that amount and that huge amount of buying on the money flow side of things, it still has it just the same, not the same chance, but a high percentage of almost a coin flip of either breaking out of the consolidation or pulling back to build more to then eventually get past there. So really what it comes down to is our original game plan. Because you'll notice something, when a stock goes into consolidation, if a stock is just consolidated throughout the entire day, why are you looking to trade it? You're just setting yourself up to get shaken out. But when most of the time, when the stocks that we're paying attention to, if they're going to go into a consolidation, what we see is somebody come in first to then give us some type of trend or give us some type of real trade that ends up in that consolidation. So what happens is it reverts back to what our original game plan is. Now, during that time period, we have to make sure that the prints match what the way that we're interpreting what the original person showed us. So it's not as easy as just saying, well, there's way more buying in this than selling. The stock needs to go up because technically they might, because there's so much selling, so much buying, and they're showing you so much buying. That could easily mean build. It could easily mean going up. So yeah, if you start getting shorter term prints and all the buying is shorter term prints, well, it's going to give you a percentage, a higher percentage for it to be able to break out of a consolidation that's that has a trend towards the upside. But it's still, there's not enough there during that consolidation. So the number one thing is that I look, is the consolidation happening because there's no trading? Because if there's no trading, I have no idea what's going to happen. Now, is the consolidation happening because they're actually trying to acquire or distribute? And at that point, we can start looking at the prints and really get an idea of what it's doing. But the only way we actually have that idea is because of the original person that we're following. So if a stock starts, we could talk about Oxy that happened, earlier today. And if a stock starts consolidating, let's just call it, 52 was one of the biggest spots, one of the biggest market makers that we saw come in, and they bought a ton. I mean, there's been nothing but buying coming into this. But if that original person at 52 told us the stock needs to go to 55 and it starts consolidating at 53.70, well, I have a very high percentage chance, and it's all about percentages, of that stock continuing because the original person told me they need to make this amount of money. But if I don't have that original game plan when the stock's in a consolidation, there's not much that you can do Because like I said, too much, a huge amount of buying, as we know as tape readers, and to go back to what you originally said, 1 through 4, the lesson that's available for the chat room, is teaching the exact rules of what we expect out of prints. So we know the exact rules we expect. So unfortunately, in that point, there's nothing that's giving us an added value into that trade. So a huge amount of buying literally could be continue up. It could be pull back to build more. We don't really know that. So there's not a clear and concise, this is what needs to happen, unless we take what happened up into the person we're following. Because as we know, we shouldn't be trading in consolidation. Trading in consolidation is literally, it's like the reverse button. It's okay, well, I think we're going long. No, it's not going long anymore. It's coming down. Let me go short. And that's how you take 15 trades in 20 minutes and end up winning on none of them. So it leads us into a point that goes back to the original foundation of tape reading, and it's, who am I following? What did they tell me? And without that piece of information, there's no real high percentage, even with money flow, to see there's way more buying, because that technically could mean 2 different things depending on how big of a position they're looking to take.
Yeah, and something I've noticed recently is students really over analyzing consolidations. And, we have our overall game plan, right? And consolidations will end up, confusing them and making them, not follow the initial person they were following. And structurally, we know that market makers are the one creating those consolidations. Am I correct?
Unless there's no trading.
Unless there's no trading, correct? Because
Unless
yeah,
it comes to a point where it's that time of the day, no one's really doing anything, you're going to see a stock go up. But yes, for the most part, a consolidation is, if there's actual trading and there's enough volume, is that that acquisition or distribution.
right. So when it comes down to like the student's perspective and if they're looking here just to gain some insights, how do I stop being confused within consolidations? You know, there's moments where there is clear accumulation within those consolidations or clear distribution, depending on where your game plan is, long or short, that'll fit your overall game plan as well. But there's lots of periods where you maybe it's 50-50 and that indecision is there. And I think students really tend to put more weight on and be biased towards the trade they're already in than, just understanding that there's indecision and then the percentages there could go either way. So how do we really transition our mind from when we're in a consolidation, we're in a trade and we're following the market maker and say, hasn't reached our price target yet, but it started to enter consolidation. How do we go about, not being stuck in confusion and more of transitioning our mind in terms of percentage of, outcome and, percentage focus rather than trying to analyze every little print that comes in within that consolidation?
Really, in my mind, it comes down to 2 things. So first of all, how confident are you in the person you're following?
Mm,
The person you're following, what did they show you? Did they show you this needs to happen at a 70% chance? Because really, under 70%, you shouldn't be following something. So are they telling you it's going to happen at a 70% chance, an 80% chance, a 90% chance? So that's the first aspect that I'm going to look at, is the original part of who I'm following
mm,
and what they told me. And then the second part is that once I start to see the consolidation come into it, does it have a chance to keep trading? We've seen stocks consolidate for the rest of the day after 10:30, 10:30. So is the point of the consolidation to accomplish something, or does it go back to the fact of just not really anything's happened?
mm,
I always call it float. It's like the stock's floating. There's no real trading going on in it, but there's movement. There's movement going up and down, because you're gonna have retail traders trading throughout the entire, the course of the day. You're gonna have, some, bigger people that aren't really market makers, but so they'll be able to affect the stock a little bit. But it comes down to, how confident am I of the person that I'm following, and is there really something trying to be accomplished within that consolidation?
mm.
Because if the prints are mixed, then I have no idea. And if I have no idea, guess what I have to do?
Limit exposure.
I'm going to have to take off exposure. But if I'm real confident in the person that I was following, just because it goes into consolidation, I don't have a problem with that. It's going to happen
Mm,
all the time. That substance, and that's like one of the hardest things as becoming a tape reader, is because the substance within a consolidation really could, if you get enough substance, really could mean two different things. So, it could, a huge amount of buying could mean that they bought enough and now it's time to go up. It also could mean they're bringing it back down. So you kind of put yourself in like a weird position. So the exposure has to come on.
Yeah.
Because not for nothing, if a stock's going to explode out of a consolidation, I'll always have room to add more.
Hmm.
I mean, it's just, it's a guarantee.
So what are some of the variables for you to really indicate whether this consolidation, it's the same, right? We see the accumulation and they're clearly acquiring money flows, definitely one-sided. And it could mean those two things. It could mean they're ready to go money time or they're not ready to build. So how do we differentiate the two? Was there key characteristics that, come to mind that
Off level
differentiate
prints. Off
off
level
level?
prints, I'm so much more concerned of. For instance, you could have a stock that's consolidating from, let's just make up numbers, from $5 to $4.50. So the actual controlling prints that happen at 450 or the prints that happen at 5 don't concern me as much.
Mm,
If I'm going to try to interpret it without having the person that I'm following originally, all about short term. So I need to see not money flow overall. I need to see short term money flow go one way or the other.
mm,
Without that, I don't know. And I'll be the first to tell you, there's a lot of times that a stock does something, I don't have no idea what it's going to do.
yeah.
We talked about that, earlier when, the meetings, I wish, I could do, but if there's no stock going out there, I went into this morning at 9:30, I had no idea what the hell I was going to do. No game plan, no anything. I had to wait. There was nothing for me to do because no one showed something definitive. So if we're going to go into consolidation, okay, as a day trader, all I care about is the shorter term aspect of what's going to
Mhm.
happen. And if all I care about is the shorter term aspect, it's not about the overall money flow, it's about the short term money flow.
Mm,
That's really going to give me the indication of, should I take off more? Should I take off less? Should I take off anything? Should I let the stock ride out? And keep in mind, that's all coming from the original, who am I following? So if the money flow matches who I'm following, the short term money flow matches who I'm following, then I'm okay with it. But if it
mhm.
doesn't, I don't know, because they legitimately can do anything that they want to.
Yeah.
Doesn't mean the stock overall isn't going to keep going up if the money flows buying, but it can take a real hard hit to the downside first before that happens.
Yeah, we've seen that where something just has clear gray buying, we're all anticipating and waiting, and then boom, they drop in. They're not ready yet. And that's just
And that's the thing, is that when you see that clear, especially if it's not short term buying and you see that clear cut buying that comes
mhm.
into a stock, most of the time they're showing you the tip of the iceberg. So most of the time they're going to bring it down first to build, because what they showed you, what their position looks like, is way bigger in the overall than
Mhm.
you have any idea about.
And how important is, substance and, the foundation of what our trade is built on once we, proceed to get in within a consolidation, right? So we have a hot stock, it's trading on the day, there's a lot of eyes on it. And, we've seen the foundation, so reason five is an example, it consolidated in that range, but, from 350 to four, it was just absolutely clear accumulation. It's just been, set like 70-30 in terms of accumulation to distribution. So our foundation is definitely, heavier on the shorter term accumulation side. Does that also influence your like your ability to read that consolidation as well? It
I
just
mean, it
what
really comes down to the original statement. Who am I following?
yeah.
So if I have that big of a foundation that, for instance, a stock technically never needs to pull back to build. A stock could build at 3 forever and tell us it has the prints for 10.
Hmm.
So that has a huge effect on what we're looking, but it comes back down to originally, what was I doing? What was my game plan before the consolidation came in?
Hmm.
And then now, does that short term, does it fit what the puzzle is of what my game plan is? If it doesn't, I have to take off exposure. If it does, might still take off some exposure, but a lot less. Because at the end of the day, again, a consolidation, we've all seen those giant bars. We want to anticipate something like that happening. You get too much buying, stock's going to go down. Whoever, puts slideshows out there where they see, a bunch of green on the, time and sales, and then says, look, the stock went up. They have no idea what they're talking about. Because as we know, that's not how this works.
Yeah, it's almost like the opposite in that aspect. I mean, there's certain
That
yeah.
So it comes back in. So that foundation is detrimental,
Hmm.
in in what our expectations are going to be once it comes up. Because as we know, when prints come in, the game plan, when a stock actually starts to move, the game plan's already been established. It's already happened. So when we see a stock going to consolidation, let's say at 3, we see all the, great off-level prints, great buying, we see everything that shows the stock needs to go to 10. And the stock's at 3, even though when it gets to 5, we're going to see a bunch of games coming into there. It already told us what needs to happen. So that foundation, that original, who am I looking for and who am I following, means everything.
Yeah. And that's such a great point for, our students and those that get confused within consolidation. It always comes back to who are you following and, how much money do they need to make? And from there you can evaluate and make the decision whether you're going to take some of your position off, or it shows you there's more room to even possibly add. So kind of transitioning from the kind of a consolidated question, I mean, it's kind of more of a structurally consolidated question. And I think we're going to stick on that kind of structural part, and we're going to go into more of it's still on the building aspect, but more on the matrix, because this is something I'm a little more confused on, and my explanation might be confusing to others as well. So I would appreciate some clarity on that. So when a market maker is putting their order on the ask side, essentially that's them selling that position. And when a market maker is putting their order on the bid side, essentially that's, they're going to purchase, shares from there. So my question is if something is just, how do we perceive that structurally with our tape reading and our methodology? What understanding do we need to have of that to really just truly have a good grasp, on whether the psychology really comes down to it as well. So it's kind of a confusing question. I'm still trying to formulate it, but I hope that maybe can guide some of the conversation.
Well, so it's almost like what we just talked about. When you have in a consolidation, you have a ton of ask, a ton of buying actually coming into it. Okay, there's 2 different scenarios that can happen. You have the scenario where it pulls back to build, or you have the scenario where it actually has enough to where they can now just release it and actually start making their money on it. So when we think about the aspect of having those orders on the matrix and having sell and buy, we have to know who's behind the other side of the computer, what the overall game plan is. Because you got to think about something. If I want to build 1 million shares, taking 50,000 shares to move the stock down to build doesn't mean much. It can still accomplish that goal to get it down, but at the same time, I'm taking 50,000 shares away to add another 200,000 shares. So it's so important to see how it's actually being executed. One of the perfect examples today, was 52 in Oxy. We saw a huge order there sitting at 52. Okay, and that tells us that most people would look at that as that's a sell order. That person's looking to get out of the stock. But what happened? It comes up to 52. It instantly executes that gigantic order. Now, we're under the assumption that every market maker has to be correct. We can't tape read without assuming that somebody that's putting big shares out there, it's going to lose their job if they don't succeed and they don't actually make money. So when we see something like that, to me, that's not someone selling. That's someone in the same house or the same Goldman Sachs or JP Morgan Chase. That's someone readjusting what their inventory is. So one of the greatest things when we see something like that happen and they readjust their inventory, it tells us they want to be far away from that very quickly. And we saw today, we saw today when Oxy was coming up after that 52 level, it built for maybe, a half hour right in that area. But look where the stock is now. I mean, we're talking about a push up into 56.50 because when they readjust that inventory, they don't want to stay around that area for a long period of time, because if they're staying away, in that area, what's going to end up happening is that, now they're at risk. Some other market maker could come in. So that's why they want to kind of get away from there. But at the same time, if that same order at 52 was there and we saw somebody come in and chip a little bit away and then the order's pulled and chip a little bit away and the order's pulled, now I know they're trying to use that as a resistance point to build. So the time frame itself isn't that different. It's very similar, but the overall move itself is way bigger in a change in inventory versus someone trying to keep the stock down to build.
Mm.
The psychology is completely different
Yeah.
because now all of a sudden I just took this huge profit in the stock and now I own it at this high price.
Mm.
So I have to go to my, my trade floor manager and tell him, well, this is what I did. If the stock now crashes to 45 and you just readjusted your inventory, you're going to be fired. You can't do that.
Yeah.
There has to be a reason behind it. And it's always, again, we look at this, the time and sales. I mean, I can see it on your screen right now as, it's passing through. You can see it behind me as these time and sales, but they're not numbers. It's literally almost like the Matrix where we're seeing pictures of people doing and intentions through what those numbers actually mean and how they do it. Because you could have an order at 52 that's instantly executed. Well, we know they're readjusting their inventory to that higher price. We have a quick time frame. This stock is going up, and not
Mm.
only is it going up, but it's going to have a larger range than we typically would even expect based off of our calculations with it. Versus if someone comes up and let's say they even leave the order there and they hit a little bit, they hit a little bit, a little bit. Well, other people are buying it, so now we know that they're locking in their profit. Stock still needs to go up because those people still have to make their money, otherwise they're going to get fired.
Mm.
But the amount that I can expect and how long it stays up is completely different. So it's not about just seeing numbers hit. It's how did it happen? What's the only logical reason for it to act that way? And someone might say, well, it's mostly computers that trade. I know it's mostly computers, but computers are also programmed by people. Okay? And if they want to readjust their inventory, more than likely it's going to be computers that do it. Because that's how
Yeah.
you get that quick, just giant. I don't care if it's a computer or if it's a person, still the same exact mindset behind the person that built that computer.
Yeah, no, that comment about the 52 asked, they were without any hesitation, they took everything and absolutely,
Just
there's no, it was instantly. Yeah. So, I mean, I think the psychology of understanding that, yeah, that's them really locking in that much shares at a higher price. And also in combination with all the short-term, positions that we have seen that were
Well,
really stood out.
that's another, we talked about the money flow and how the shorter term, I mean, there was just nothing but shorter term buying and buying. And every time, we got to think, if a stock hits 52 and it pulls back, the only reason for a stock that needs to go higher to pull back is to build more. And
Mhm.
that's all we saw as it was going down, just more and more shorter term prints and building and building and building. But what it really comes down to is who is a dominant market maker? Someone came in at that 52 and said, I'm now taking my shares from 30 and I'm putting up here at 52. So how, as I teach everybody here, how long do we want to wait to get away from our entry?
So we want our entry to get as quickly away from our, you know, get it quickly away as far as
As,
possible.
as
Yeah.
far as possible, as quickly as
Yeah, I'm
possible.
kind of backwards.
So if I'm going to readjust my entire inventory on this huge trade all at once, I'm not waiting a long time for it to get there. And that's, you look at OXY today, and it just fits it fits the psychology perfectly.
Mhm.
And that's what happens day in and day out. It's not just about the numbers. It's not huge 52 ask prints. Let's look for a pullback trade.
Mhm.
No, because really, what did they tell us? Well, I'm changing my inventory, so this is going to happen quickly.
Yeah.
But yeah, we
And
still need to pull back, but we don't need to pull back as long as if there wasn't a huge order there because the psychology is different.
yeah, and this not to mention, I mean, I've not seen, especially just this week alone, that much off-level buying. It'd be different though in this situation where we get that much buying, but it's followed by no, off-level
Mhm.
accumulation. That gives us that situation where they're looking to pull back and build. But I think just from the student perspective, I know I got a few messages saying, why wasn't this a larger short than what it was? And I think just truly understanding the psychology part of them, locking in that price higher, and then in combination with short-term prints, and then so much eyes on it, it makes sense for the lack of pullbacks that we did see. So
And you got to think too, the only reason for a stock that needs to go up to pull back is to build. And look how quickly the building happened.
mhm.
I mean, the interest was there. So you got to think, market makers, it's not that they want to, they get in a huge position and they pull it back to build. They don't want to do that for a long period of time. Wouldn't they rather it happen in a day? or 2 days. They want it to happen quickly too, but it all
Yeah.
comes down to what's actually available out there to be able to do it. And because the amount of interest, all we saw was off level buying, off level buying, off level buying. So we know that's what we see. Imagine how much they're easily able to get that we don't even see. That comes in between prints or any other type of prints that are coming in there. We got to think, kind of ahead of exactly what they're telling us. So when the stock starts to pull back and all we see is building, we have to assume that there's no problem getting the interest they
Mm.
need to get it to go where it needs. Overall told us 52, okay, 52.50 is going to be, some gains that are played there, but overall, at the end of the day, 57.50 conservative, really 60 from how much we've seen so far.
Yeah, and I
I
think
mean,
this maybe fits in a question that I got asked today too, is how do you go, okay, you're under the assumption maybe initially when you don't have all the information, you're looking for that overall pullback, you're looking for it to build as much as it should be based upon our calculations. But how do you quickly adapt and adjust to go back to that number four and just understand, okay, this is really not gonna, this personality is already telling me that this is not going to be a number one heavy stock, it's really going to be number four given the information that comes in, because I know we ended up getting a maybe a 50-cent pullback early on in the morning where and our students were anticipating that pullback trade because the prince said this needs to build, but on that those bars down there was absolutely no selling at all. It was just it wasn't clear one way or the other, and then
you
we ended
just
up coming
answered
back
the
up.
question yourself. I mean, you got to think
Yeah.
about it. Okay, to the amount of pullback this stock needed, was it going to be little or big?
Oh, big, no question, but the prince that showed.
Big time. So
Yeah.
you're telling me that with no selling, no one's interested in getting in on that short? We didn't
Hmm.
see anybody. The one trigger that we actually did have once it popped up to that 56.50 level that came back in, we actually saw substance for the first time on the actual trigger itself. We didn't see
Yeah.
any selling. There's no way that a stock is going to pull back $8 and nobody coming into it. No one ever came.
Hmm.
There was just never any type of short-term selling or any real selling coming into it. So we have off-level, okay, short-term ask prints, huge building ask prints with no selling. Where's the stock have to go?
No selling. I mean, and it's all off level. I mean, it's just, and the controlling prints tell you overall what needs to happen. I mean, yes, build, but those controlling prints need to make money themselves.
And they did build, but those prints at 52 on the ask told us that it should have been more than $1. But
Yeah.
I literally put in the chat room. We only need 75 cents, 50 to 75
Hmm.
cents, because we had 52.03 that came in. You just keep having these short-term buyers. Immediately after something tells you it needs to build, you have short-term buying coming in. So they're telling you that they don't need to build for an extended period of time. It's that simple.
Yeah.
Because if they were going to build for an extended period of time, those 52.03 would have been sell prints. We would have sell prints under. We would have had some. No
Yeah.
one's.
And eventually, does the pullback truly need to be satisfied overall for how large they showed?
Yes.
Like that's more of a longer term scope, right? We're looking at, days,
Not
weeks,
worried about
months.
that today because I'm day
Yeah.
trading. If
Yeah.
I'm
So
trying
that,
to trade this longer term, would I look for a short at some point? I absolutely would.
yeah.
Especially because if you look at the daily chart itself, it's coming to a measured move.
So
So it's
that's kind of
getting
a different
towards that like
perspective.
top of the pattern range. And again, I don't put any real weight towards patterns, but patterns to me just mean there's an opportunity for volume. The
Hmm.
prints are going to tell me what that volume should do. It's just an opportunity for volume, but it's coming up to a spot where it's either continue and really continue, or we need to get that whole large pullback at once. And
Yeah.
we really do need that large pullback because we've been going on for a week. And all this thing does is show I don't pull back much, and I just keep having short-term buying coming into it.
Yeah, and I think as I can reflect back into maybe a year or two ago when I was beginning or more beginner student, I used to miss trades like this. I used to see those 52 and I'd be like, it didn't pull back given the proper amount that it should have based on how large those were, and I'd be left behind and I'd see the stock run another $5 and I'm just scratching my head and I'm sitting there, well, overall it needs to do this, but you're not trading overall, you're trading now, you're trading what's in front of you, and that's the shorter term prints that are continuously coming in. And that's kind of my thought process and tip for those that are maybe struggling with that. Maybe you're missing trades because the overall didn't pull back. Maybe you're really you're miscalculating based upon the off level that are coming in, and the volume that's showing you and the ability to build quickly. So
I mean, it's really a simple rule of thumb is that if you have prints that tell you it needs to pull back $1. So let's say the print personality of the increments tell you it's trading in 50-cent increments. It's higher than print personality tells you it needs to pull back $1. Well, if you have a ton of off-level ass prints that come in,
Mm-hmm.
that dollar now decreases.
Mm.
So now the acceptable high probability of an actual move, instead of being that full dollar, now is about 75 cents. The more, let's say you have more, it's really only about 60 to 50 cents. You see what I mean? So
Yeah.
it's the calculation is changed by what they're just putting right in front of you.
The,
Because
the fo- the
there's no
formula
person
changes,
that
right?
wants to fight with other people to get shares. So if they're giving real short-term shares, it's telling you because they want it to happen or they know it's going to happen in a real short-term time period.
Yeah, so it almost like if your calculated mindset is that formula changes once you get that off level, accumulation and it's there and obvious. So that's part of the formula that you have to you be truly mindful of and really look out for. So that I mean that's a great point. I think I think that's a great, lesson to end on there for, it's a Friday afternoon, and I really want to get this posted for everyone, but that's a great lesson to end on is just, that formula changes when that off level really, changes as well. So
Well, if
Rich,
someone tells
appreciate
you
it.
something's going to happen in the short term, you got to believe them.
Yeah.
They showed it over and over again. So and it's funny too because even if you were waiting to trade this, after that pullback from 52, there were tons of trades before it.
Hmm.
So really, and those tons of trades before it just keep showing the same thing over and over again. It's just the personality.
Yeah.
So the day that those off-level asks stop happening, that's when I'll expect my pullback, my large pullback. Until that
Yeah.
day, I'm waiting for that number 4 trade to go right back up.
Yep. So it's really important to have those off-level prints and, highlighted within your formula for your calculations on how much pullback you should expect.
It's the only thing that can really make something an exception is now
Yeah.
prints. Otherwise, it follows the rules.
And oftentimes those come with great volume, right?
Oh, almost always. I
Yeah.
mean, you're looking at this. I mean, even at its lows, it's trading 200,000 shares a minute. This thing hasn't stopped trading all day.
Yeah. Because
We're talking about it's 305 right now, and it's still just going.
you wouldn't see, all those off-level people with shorter term trying to make money now if the volume wasn't there. It just doesn't make sense.
Nope. Well, see, the thing is that it's the reason it doesn't make sense is because of the fact they can't. If there's
Mm.
not enough trading and they're showing you these huge positions that need to build, if they didn't have this volume right now, it would have to build
Mm. Wow.
because the less people out there to take shares from, the longer it's going to take to build. But because the volume's just staying consistent, that's why we're seeing these off-level buying coming in because they know that they can build real quick.
Yeah.
So it's not that it's just, oh, well, this happened. There's a specific reason that it's
Yeah.
happening that way, and it happens with that type of volume.
Yeah, no, I've noticed it always leaves clues. Like those exceptions always leave clues, and it's exceptional volume and it's an exceptional off-level prints. So
Yeah,
those
the,
are
the
two.
less the volume is, the less people are trading, the harder it is to build a big position. So it takes longer. The
Hmm.
more people that are trading, the more people that keep coming in, the less it takes for them to actually build because they have that interest level. So I mean, it literally fits the puzzle perfectly.
Yeah, this one hit the nail on the head right there. That's such a great point. I mean, that's one of those ones you put on a sticky note and you keep it there for forever.
Hmm.
But
Because
all
it
right,
doesn't
Rich.
change.
No, it doesn't change at all. I appreciate you coming on, especially on a Friday. I know we didn't really get to get the podcast out earlier in this week, but always appreciate these conversations and hope you have a wonderful rest of your weekend.
All right, you too, Dave. See
Later,
you guys
Rich.
next week.